Hi all, welcome to Market Insights by J2Wealth. Today we have Mr. Ganesh Mohan, CEO of Bajaj Finserv Mutual Fund with us. Thanks a lot for giving us the opportunity for the interaction today, sir.
My pleasure. Thank you very much for having me here.
So actually just now the budget announcements have come, sir. So market has been at all-time high. So today at this, after the market has closed, it has closed flat. So when the budget results came, it was little volatile, but again it has settled down. So the market has been very high as of late. So do you think there is more room for growth, sir?
Yeah, so if you look at the overall market, we typically at Bajaj Finserv AMC, we break it into three different parts, right? The large cap, the mid cap, the small cap. While, of course, all of the indices have been hitting all-time highs, when you look at the large cap, there is a lot of earnings support for that. So when people say that it has hit an all-time high, what they're missing out to say is also that earnings have also hit an all-time high.
Yes, sir.
So from a valuation perspective, large caps we actually feel is in a fair value zone.
Okay.
Mid caps, when you compare them to large caps particularly, they have run up quite a bit compared to the long-term average. And small caps have also run up, but not to the same extent as mid caps. So we see large caps as having very good support from earnings. Mid cap, certainly there is some risk in the current valuations. But small cap, we would say that there has been some run up, but within the small cap, it's a very large sector. Right? There are a lot of opportunities and a lot of companies that are not necessarily overvalued at this point, and so you can still create a good portfolio over there.
Okay, sir. So, the RBI governor has released a latest statement that household money is been going from banks to mutual fund or capital markets mostly. So, what is your call on that, sir?
So, I think there's a couple of things that we need to always keep in mind. If you look at the current accounts and savings accounts balances, that's about 26 lakh crores. If you look at FD balances, that's 160 lakh crores, right? Okay. Comparing that to, let's say the equity and, ETF section in the mutual funds, which is around 35 to 40 lakh crores. So there's a significant room still. So the banking sector is way larger than the mutual fund sector. That said, what investors will be doing always is to look at what are the best options in terms of returns, liquidity, as well as flexibility in terms of getting their money. So they will always be comparing different options that provide different levels of yield, different levels of lock-in, and different levels of flexibility in terms of when they can utilize their money. And I think mutual funds provides a very good option, right? What I think the RBI governor and even the SEBI governor is more concerned about is actually much more about the level of participation in the direct equities and particularly through the F&O market.
Okay.
Right?
Okay.
Rather than the mutual fund market itself.
Okay, sir.
Because the F&O market actually has become a very large component of the equity trading business today. And that is something which has significant amount of risk. And as you've seen with the data, about 90% of investors lose money there.
Yes. So
the chances of risk and loss are very, very high there. And that is really, I think, the cause of concern for the RBI governor as well as the SEBI chairperson.
Okay, sir. So, sir, if you see in the July month, the DIs have been continuously in the selling pattern. So why do you think, what is the reason behind this, sir?
So DIs have actually, a lot of them have actually been investing as well,
yes,
right?
Yes,
because you have significant amount of flows that are coming in regularly through the SIP route, right? So you have about 20,000 crores that is coming in every month from the SIP route, right? The FIIs have been a little bit more, cautious, I would say, on the market, and they are still to probably take a call as to when they will come back in. Given that the interest rates in the US are still elevated,
yes, sir.
Right? The moment we see interest rates started to decrease, right? When the rate cut cycle starts in the US, we will see a lot more flows that will also start coming in from the FII side into the Indian markets.
Okay.
And DIs, I think, have been by and large supportive of the liquidity environment today.
Okay, sir. So many experts in the market, sir, believe that the mid and small cap run will be over for some time. And the next year, the coming year, would be the year of the large caps. So is that the reason that why are you coming up with this NFO of Bajaj Finserv large cap fund, sir?
Yeah, so I think what we try to do is in every single fund that we are launching, particularly as an NFO, we always keep an investor's interest as the first and the primary concern, right?
Okay.
So we want to ensure that investors will get a positive experience and that we are bringing the right product for the right time for all of our investors. We are clearly seeing that compared to, let's say, the mid cap or the small cap space, large cap clearly has the valuation opportunity much more in its favor. What we're also seeing is as slowly FIIs start coming back into the market, we see the tailwind of large flows that will be coming predominantly directed at the large cap and maybe some quality mid cap spaces, right? Okay. So given the valuations are good right now, given the likelihood of good flows coming into this sector, we are seeing a pretty good outperformance opportunity in the large cap space, which is why we're bringing the large cap NFO at this point of time.
Okay, sir. So when I saw a brief note about your Bajaj Finserv large cap fund, I saw that you are going to have a concentrated portfolio, as well as it's going to be a bottom-up approach as well. So why this kind of a call did you take, sir?
Yeah. So with large cap, the category is limited to about 100 stocks, right? If you try to recreate a typical mutual fund portfolio of, let's say, 50 to 55 stocks, you by and large will end up taking one out of every two stocks that is there in the index, right? So you end up really almost creating a closet index in many ways. Now, if your active share is very low, you're more or less replicating the index, then your chance of generating alpha is also much lower.
Yes.
Right? So when we looked at this category, we said that the only way that you can really generate alpha in this space is by taking a more concentrated call on specific stocks. So we are proposing a portfolio of something like 25 to 30 stocks that we will be focusing on. So out of the 100, we will pick 25 to 30 stocks. That will be the portfolio that we will be investing in. And since we will not be investing in about 70 to 75 stocks, already the active share will be significant. And since we will be taking more concentrated calls on these 25 stocks, that will create an additional active share. So active share is actually very critical for us to be able to generate any kind of alpha in our portfolio. And that is something we track very, very carefully across all our funds to ensure that if you're creating an active fund, there needs to be significant active share to be able to deliver alpha.
So to summarize this, to finish up the interview as well, to all our J2 subscribers, if you want to summarize on Bajaj Finserv large cap fund, what you would tell them, sir?
So I would tell them that large caps are the drivers of the economy for the country, for any country, and particularly for India. They are very well positioned at this point of time. There will be significant growth that will be coming in the large cap category. They are positioned very well from a valuation standpoint. And in order to create alpha, we will create a concentrated portfolio of about 25 to 30 stocks that will be investing in the champions of corporate India, the companies that can drive India's future, the companies that can raise capital and drive capex and help India in its next journey forward. These will be the companies that we will invest as part of our fund.
So thank you, sir. Thanks for your time. It was a great opportunity for us, and it's been an honor to interview you today, sir. Thank you.
It's been my pleasure. Thank you very much.
Thank you, sir.